Hello traders, this is my weekend video and some stuff that I'm seeing in the markets. Basically, I want to start with this little indicator. It's from CNN Money. Um, it's a free service, and I didn't really want to go to the website and take a chance of any type of privacy issues, but I want to give you a quick snapshot of one of their very important indicators, and it has like five different things that they derive this information from. If you get a chance, go and look up Fear and Greed off of the CNN Money site and check this out, and especially the indicators. It's a very good overall view of the markets. And we're at 11 now, and basically, once you get below 20, you start looking to the long side for some opportunities for at least a short-term bounce in the markets. So the markets might be extremely overly bearish here in the short term, and we could see a relief rally, in my opinion, uh, given the fear and greed index and some of our other indicators. So I just wanted to point that out, that fear and greed is at an extreme here, and cyclically we are due for a bounce. This first week of December was the cyclical low for the S&P, potentially for a bottoming process on the cyclical charts, but a lot of damage has happened, so I'm not for sure if that's the case. Okay, so just something to keep in mind. The skew, we are coming off the most extreme read ever in the markets on the skew, all the way down to near lows on our skew. If you go back in history on the monthly, I mean, we have had slightly lower reads in the past um, on the skew, but we this is the biggest fall ever in history on the skew, and so and the skew measures the number of the outstanding number of out of the money call puts versus the out of money calls. So right now we have the biggest out of the money puts, one of the biggest reads we've had in a very long time. So just keep that in mind, that everybody and their brother, it's a crowded trade to be on the put side uh, in the markets right now. So, um, and despite all that, I tell you how it's crowded on the put side. Our VIX is actually at 24, and 24 is not a fearful area for the VIX. This is just basically saying that we got a 2% move in the S&P futures, so we are not overly bearish the markets right here. So just keep that in mind. If you go on the daily here, uh, we pretty much just chopping out around here around the 24, and with the Fed disappearing here and quantitative easing, it is only likely that we are entering a period of higher volatility in the markets, a more normalized approach to the markets. Maybe this is a little bit inflated right here, right now, but as far as the fear and greed indicators are showing, the VIX is not showing much fear here, even at 24. It's just we're not used to seeing 24 on the VIX. So, and it's taken a little while for all of us, a new generation, to understand how to trade a VIX at 24. And but this is more of a normalized market situation that many of us have never really traded before. So, just some two little things I wanted to point out in the markets going on here. Okay. Okay. I posted this chart on Twitter and StockTwits, and basically it overlaps the advancing issues with the shadow area, and then the declining issues. And basically, we had 2-to-1 declining issues there Friday over the advancing issues. Okay, so that's pretty bearish. Yeah, that's why the fear and greed indicator read so bad. But what one thing that I did notice that buyers at the if you go look at your SPX, we've got a little box going on here in your SPX. You've got a little box pattern happening on the SPY on your low trading range, just 200-point range, and on the SPX, and we closed right here at the lows come Friday. Well, what I saw happening there on the um, at the close Friday, we saw buyers stepping in down here this time. The past times that we came down here, it was capitulation selling for the most part, and we did see a little bit of people taking a bullish side bet going into the weekend for the overnight session or the weekend session. So it's just something that suggests to me that we know that the VIX is not really yelling panic yet, and we have a topping pattern going on here. And it seemed like that they were fishing a little bit come Friday into the close. So I'm not throwing the baby out with the bathwater yet. I still think this pattern will resolve lower here in a relatively short period, and the actual support is down here at the 25 or 255.40 area. These prior, and that would complete our head and shoulders pattern. I think we're actually at a elevated area still, and it needs to come down and retest this trend line. Just my opinion here. But it looks like we are due for a short-term bounce to reset our oscillators to the upside in the near term. So just keep that in mind. We had a proliferate of negative headlines hitting the tape last week. It was unreal, just all the bad news. And it just, if you don't typically have weeks like that where everything coming out was just negative, negative, negative. So if we just have a little bit slow down in the negative news cycle and get some of it'll dramatically change the fear tone in the markets, and we could start seeing a little responsive rally here. I'm not arguing the fact that we are putting in a significant top here, and there's a lot of overhead inventory. But to be pushing the put side here is kind of foolish when all your main indicators are already maxed out, in my opinion. Some charts that I'm looking at for the week ahead here, and my first one would be Costco, and it has all this way up here has had a sell off on their earnings event on this whole last leg higher, and the markets has just completely blown it off. So I'm very concerned. We finally, actually going in right here. We're going into the earnings event with prices below the daily cloud, and that's actually in this whole leg up. They pretty much the markets have just kept buying and buying and buying into Costco for this whole leg here, and they're just meeting their expectations. And with the market being as weak as it is, this one here seems to be a no-brainer short candidate for these earnings. Thinking that there's going to be some profit taking coming out of Costco. There's a lot of hype about them going into the Amazon type platform, and that's an expensive platform, very difficult for companies to enter, and it's takes a long time to build out that infrastructure, and they've already got a low margin business, and so I'm quite skeptical about how well their um, the online model and the, you know um, they do have some news that they're going to try to go into video streaming too, and that's becoming a crowded space too, and it's going to be taking market share away from Netflix. So I see all these companies entering the video streaming space, and a few of them are going to actually come out and succeed at it. A lot of them are going to fail big time. So just keep that in mind. Some stuff that I'm looking at on that. Um, if we do get a responsive bid into the market, my top FANG name would be Amazon, of course. Uh, it's got a uh, basically they still accumulating calls down here. 0.84 is accumulation of calls at Amazon at these devalue prices. It is below the cloud, but if the fear and greed index does come off a little bit, Amazon should catch a little bit of responsive bid there. Another one, which is a bellwether for the entire market, and that would be your Apple. And I am targeting 165 on Apple, which I think we will here at the first of the week. We are going to come down here, we're likely gap down Monday, and we could easily do this in one day, easily. If we were to come in with a little bit of weakness Monday morning, and we get down here to the 165 area. So just keep this in mind that Apple is one of my favorite long candidates at 165. And if I go up here on my other chart, you can see basically if you go off of okay, I drew my um, or no what do they call it? Fibonacci retracement. I drew it based off of the SPY October 29th lows. And if you draw it out and you see how it all matches up, it is truly targeting the 165 area. The way the price pattern is is all coming out here on Apple. So I do think this week Apple will hit the 165 area. And that would probably be the turning point in the markets once it gets down to the 165. So that's why I'm still thinking come Monday we'll probably see a little bit more downside action. Waiting for some of these other charts. There's other charts too that are all near their responsive buy zones, but not quite there yet. So we'll just keep this on the radar as Apple is a potential long candidate this week. Okay, and then let's see here. Some other ones I'm really looking at. After we get the reset, I'm looking for Abbott Laboratories as a swing short candidate. And if you go out here on the monthly, it missed on earnings. Look where it's located. Okay. And if the markets are showing weakness here, Abbott is just the absolute prime candidate. I actually think it's going to break below the cloud this week. So this one here is a favorite short candidate. I'm just hoping we get a little bit of a bounce so I can enter the position and ride it for a few weeks here for the breakdown. And then if you go to on the long side, if we get a bounce, FedEx has to bounce for the transports have to bounce if the markets are going to get any type of sustained move here. So just keep that in mind. It just got decimated even there Friday on the FedEx, and we're getting a long ways away from our daily cloud. So this is we have a double bottom in place here on FedEx, and it should catch a responsive bid here, in my opinion. And if you go out on your weekly chart, I mean, it's just outright carnage. Yeah, remove that drawing. Think or swim, the channels are not working quite right. They did an upgrade and they messed it up. So, but at any rate, if you look right here, we do have we closed just slightly below a prior support area, and you can't, you know, you can't really predict to the penny where a stock sometimes will stop. And you saw with the fear and greed index that they were really dumping a lot of stuff there Friday. So FedEx might have overshot here. But if this, if we start making lower lows this week on FedEx, then this market's probably in a lot of trouble. And, IWM. I wanted to point out here the box pattern. IWM did try to push down below that box, but we do have a reference. It has done that before back on February 5th that it poked down below, and it's trying to retest that February 5th low. So, yeah, if we get a little bit more weakness in the markets, I can see it might catch a little bit of support right there. And just keep a really close eye on your bond yield, your bonds, because they were catching a substantial bid there Friday, and so they were very hot last week, and we did close back. We came back in off of the highs, so the bonds are going to tell us a lot of where this. We've been in a sustained downtrend in bonds for a long time, and you see in a relative, you know, typically bonds in this zone right here, it it goes all the way up to uh, the 1950 area is a responsive resistance area. So we did find a little bit of resistance right here. We do get continuation higher this week. This is something you really got to be worried about because this is the risk off trade. Um, and we do have still a lot of fear in the markets. We don't have any resolution in the China thing. We don't have any resolution in the government shutdown stuff. And I've heard over the weekend, which is probably going to be a hot topic, that they're busing those immigrants over the border instead of just letting them sit over there on the other side of the wall. They've been busing them in. Uh, so thousands upon thousands of these immigrants that are sitting in Mexico on the other side of the wall, they're still coming into the U.S. Despite all the political rhetoric that's hitting the tape. So just keep that in mind. That a lot of drama and stuff hitting the markets this week. And then to finish it all off, that's the junk bonds. I'm still keeping a very close eye on the junk bonds. They're looking really sad. Um, maybe they flag out here a lot, or flag out for quite a bit longer here, but we are in a strong bearish downtrend on our junk bonds. And this is going to have a major impact on our mid and small caps. And so as if the treasuries do come back, continue to go higher, the TLT continues to go higher, this is going to put increasing pressure on the junk bond area of the market, and it will break the indices down. So it's very important to realize just how the flight to risk into TLT, that is a major driving force in the markets this week. And if we do not see TLT start coming in, it's going to be the fear trade is really going to start coming on into the markets. And that's another thing. The VXX, that's predicting 3 months out. Basically, you can tell it's a it's this is a instrument. It's short. It's a short instrument that because of the reverse splits and stuff, it tends to not hold its value very well. But you can see we are in a heightened area in the VXX at 40. And typically this range up here is because the VIX is showing us that we're not really showing any fear in the markets. Okay, but they're predicting about 3 months out here that the thing is going to get a lot worse. And that's why the VXX is catching a bid right here. So we want to keep a close eye on our VXX for because it's forecasting to us that come into the first of the year, there's going to be a lot of risk into the markets. I can see the first of the year because there's so much profit out there that a lot of traders immediately after the first of the year are going to be locking in profits for the next calendar year tax season. And they're not going to take a chance of January 1st being the highs of the year. They shouldn't be, but the markets have come an extremely long way. And taking some profits off the table right here, there is nothing wrong with that at all. Okay, that's all I got to say on the weekend video, and good luck, and I will see you in the trading rooms this week.